Fintech users don't care about your marketing claims. They care whether you're secure, compliant, and don't disappear within 18 months. So in this video, I'll walk you through 5 automation flows that instantly signal trustworthiness, and I'll break down the fastest way to build them. I'll also be sharing ready-to-use templates that you can plug straight into your system, so make sure to keep watching. Hello, and welcome to Mailtrap videos, where we explore the world of emails, and sometimes the emails of the world. Let's kick things off with onboarding, the thing that every fintech has to do, but almost none actually nail. I've seen over 10 years of email marketing, and I've reviewed hundreds of onboarding flows. 10 years ago, that was the 90s, right? Right?
Well, not exactly.
Man, I'm old. Anyway,
take it from this old man. Confusing onboarding flows always come back to bite you.
slow activation, higher churn, support tickets, it's the same pattern every time. The numbers, they also back this up. According to UserLens, 75% of users abandon a product within the first week if the onboarding is confusing. Scary, isn't it? But there's a good reason for all that. You see, the moment that someone creates an account on a fintech platform, they're taking a financial leap of trust. This makes your greeting email to them so much more important. It's the message that'll set the tone for your entire relationship by confirming consent, establishing identity, and showing that a strong customer authentication has been initiated. So when it comes to your onboarding flow, it needs a clear strategy behind it, starting with a welcome and confirmation message. This message should land within seconds of sign-up. And yes, seconds matter. When I was optimizing onboarding for a fintech team last year, we managed to cut the welcome email delay from 3 minutes to under 10 seconds. Guess what happened after that? Activation jumped immediately. But besides arriving quickly, your welcome and confirmation messages will need to do a few other things. 1. It needs to confirm that the registration was successful. 2. It should include the time and date for transparency. And 3. It must reassure the customer that their data is protected. If you really want to be diligent, you can use this message also as an opportunity to remind users of basic security hygiene, such as never sharing credentials and never forwarding verification links. And of course, don't forget to encourage enabling multi-factor authentication right away, whether it's an app, SMS, or biometric method. By adding these small touches, you'll not only build users' confidence in your platform, but you'll also meet global security expectations, such as PSD2's strong customer authentication in Europe and FFIEC's layered security guidance in the US. Okay, not to scare you, but did you know that onboarding isn't a one-email job? I wish it were. My calendar would be so much emptier. Jokes aside, this is a fact. Onboarding doesn't stop at "welcome aboard." And that's why 2 days after your initial email, your system should trigger a follow-up sent to anyone who hasn't finished their setup. In this email, you can say something as simple as, "Let's finish securing your account so you can access your funds." A small automated reminder such as this is often all it takes to move users from almost done to activated. And once the account is fully set up, you are free to shift focus. So next, add another automated email that guides users through the essentials: where to find statements, how to review permissions, and how to manage privacy settings. Here, make sure to skip the marketing talk, because trust me, nobody wants a sales pitch when they're still figuring out where the settings tab is. Finally, to close your onboarding sequence, you can sprinkle in a support and the next steps message. This message should provide clear channels for help, fraud reporting, or account management, and link to your current terms and security resources. If done right, it should, along with the rest of the flow, allow the customer to feel guided, supported, as well as safe. Now, if you're already thinking ahead about what tool you should use to build your onboarding flow, or any of the other automations that we'll cover, you're in luck, because Mailtrap makes this process incredibly easy. With Mailtrap, you can build complete automated email sequences using a combination of triggers, actions, and rules, and you can monitor performance for every step. And since the entire builder is drag and drop, even a multi-step flow can be up and running in just a few minutes. Here's exactly how I used Mailtrap to turn the onboarding flow we just discussed from concept to a fully functioning automation. Once I logged into Mailtrap and opened the Automations tab, I started by clicking Create Automation. From there, I named the flow and added the first trigger. Since this is an onboarding sequence, I used the Contact Created trigger, so every new user would automatically receive the welcome email. Then, I went ahead and used the Send Email action. Here, all I had to do was fill in the basics: sender name, subject line, and the email design that I already had prepared inside Mailtrap. As the second email needed to be sent 2 days after the first, I followed up the action with a time delay rule, and then added another send email action. This time, I made sure it contained a different template and a different subject line. For the remaining emails in the flow, I simply repeated the pattern. Time delay, send email, done. And that's pretty much it. The full onboarding sequence was live, automated, and ready to run on its own. Convenient, huh? Ladies and gentlemen, we interrupt this program with some breaking news. Manual KYC emails are now one of the leading causes of users failing to complete verification. And before you worry, no, I haven't switched careers to become a TV presenter. Although, I just know that an automated KYC sequence can solve most of your user verification-induced mess. But before we get into more details, just a quick reminder to click that subscribe button so you don't miss out on more videos like this one. Jokes and all, if onboarding is what gets users in the door, KYC is where you show that they're in safe hands. And in any regulated fintech, identity verification is the gateway to every financial privilege that comes after: moving money, applying for credit, or accessing sensitive data. Plus, with identity fraud costing businesses over $50 billion a year, this is one step you simply can't afford to get wrong. Just ask the compliance team that still reminds me about that one bad document request email every time I walk past their desks. But back to practical advice. Once a customer has created an account on your platform, your very next task is to confirm who they are. This is where a KYC flow does the heavy lifting. Typically, this flow starts with an initiation email. A message is sent immediately after sign-up or as soon as the user begins setting up their account. And although this message can be a little dense, it has a crucial role of educating and explaining that verification is required under global anti-money laundering and counter-terrorist rules, AMLD5 in Europe, and the Bank Secrecy Act in the US. For the actual verification process, in the message, you'll of course need to list the documents you accept, outline what a successful submission looks like, and direct them to a secure upload portal. Also, to set realistic expectations, you'll need to give a heads up of things like review times, potential delays, and what users can do to ensure a smooth process. Now, here's where most fintechs lose people. Not during the first KYC email, but in the follow-up, a pattern that I've seen in my team and across competitors. So, to make sure that this isn't the case for you, once the first KYC email has been sent, give each user about 48 hours to complete their submission. And for cases where no documents have been uploaded during that time, set a conditional step that automatically sends a gentle reminder. A simple line like, "Completing verification ensures your account stays active and prevents unauthorized use." That will do just fine. Once the user uploads the required documents, trigger an automated acknowledgement email. Thank them, confirm that the documents were received, include a case or reference number, and provide an estimated review window. If everything checks out, your automation should trigger a decision email to close the sequence. For users who don't pass review, in the decision email, explain the reasoning in neutral and factual language. Like, for instance, the proof of address was unreadable, please upload a clearer copy. This should help them resubmit quickly and allow your compliance team to reopen and reassess the case without delay. Identity verified? Great. Now, we move on to the flow where the plot thickens. Loan or credit application updates. Whether it's a personal loan, a credit line, a refinancing product, or a home financing option, when a customer applies for any kind of credit from your fintech, their expectations around communication change immediately. Think of it like this. If onboarding is a casual first date, a loan application is when someone says, "So, where is this going? What are we?" Suddenly, they want clarity, timelines, and absolutely zero surprises. And from a regulatory perspective, they need to receive both. Supervisory bodies, from the CFPB and the FCA to European fair lending authorities, all emphasize the same principle. Credit decisions require timely, accurate, written communication at every stage. But from my own experience helping a lending team, the regulation wasn't the hard part. The silence was. You see, customers weren't worried about the decision right away, they were worried about not hearing anything. That is why, the moment the user submits their form, trigger an application confirmation email. This message should let the customer know that their submission has arrived safely, provide a reference number, and outline what happens next. Also, it should list any necessary documents, such as proof of income, bank statements, ID, or supporting materials. Once all of these are submitted, use a conditional split to automatically send a status update confirming underwriting is underway. And for transparency's sake, don't forget to state how long this phase typically takes and how they can contact support if needed. You'd be surprised how much trust you build simply by telling people where their application stands. Turns out, good communication saves both loan applications and relationships. If anything is missing, set up a rule so that the system automatically sends a missing information request based on the document that wasn't provided. And just like in the KYC flow, this could be as simple as, your application is missing your most recent payslip, or we still need a copy of the ID used during your profile setup. When your credit team reaches a decision, you can send a conditional approval email. Here, you should explain that the application has been approved based on initial assessments, but still depends on certain conditions, like additional checks, updated documents, or final verification steps. If you need to mention rate ranges or repayment terms, frame them as preliminary and subject to final approval. And as always, keep the tone factual and balanced. Finally, if the customer is approved, woohoo! Outline the exact terms, interest rate, repayment schedule, fees, and any actions required before the funds are disbursed in a next steps email. Also, don't forget to include links to the formal regulatory disclosures, such as the Truth in Lending documentation in the US or a Consumer Credit Directive information in Europe. If the application is declined, explain the primary reason in a straightforward, non-judgmental language. And if the customer can appeal, correct information, or reapply later, let them know. Because at the end of the day, this level of transparency isn't just good service, it's a fundamental part of fair lending compliance. Quick question for you. What's the fastest way to accidentally upset both a customer and a regulator? You guessed it, mess up your payment emails. Be it an active credit product, subscription, or recurring obligation, once a customer has any financial activity tied to their account, your payment emails, in most jurisdictions, are treated as regulated disclosures. And yes, this is where the big guys get involved. In the US, laws like the Truth in Lending Act define how and when borrowers must be informed. While in Europe, consumer credit rules and SEPA mandates set similar expectations. And trust me, these aren't guidelines you want to gloss over. I once sat through an audit where the regulator asked to review 6 months of payment reminder emails. Not invoices, emails. That's how closely this communication gets scrutinized. For this reason, a well-structured payment reminder flow is a must. Here's what it should look like. 7 days before each user's due date, trigger an automated upcoming payment notice generated by your system. In this email, keep things simple and transparent. State the amount due, the due date, and the payment method on file. None of that vague, you know what you owe mafia stuff. If the payment will be collected automatically via SEPA Direct Debit, ACH, or card, make that clear as well, along with the expected debit rate. But if the customer pays manually, include a secure path to review or make the payment. About 5 days out, you can trigger a secondary reminder. Here, your goal is to help customers avoid problems. So, encourage them to make sure that there are sufficient funds available or update their payment method if something has changed. By this point, your goal isn't persuasion, it's prevention. Then, 1 day before the due date, trigger a short, polite reminder. This doesn't need to be a long message. A single sentence can be enough. Your payment of €248.60 is scheduled for tomorrow. If your account has sufficient funds, there's nothing you need to do. Simple. Think of it as a friendly heads up that also keeps you on the regulator's good side. On the due date itself, trigger a final notice confirming what actually happened. If the payment was successful, let the customer know and point them to their receipt or statement. If it failed, this is where your communication really matters. A no payment follow-up should be triggered immediately when a charge doesn't go through. In it, explain that the payment failed, outline the likely reasons, and provide clear next steps. when you will retry, if you will, how they can update the details, and what impact a continued non-payment could have on their account or credit status. The tone throughout this email is critical though, and should remain factual, measured, and fair. Fun fact, when regulators review customer complaints, they often look at these messages to judge whether your firm treated customers reasonably. And when your payment reminder and billing sequence are designed in the right way, it does more than reduce churn or missed payments. It demonstrates that your fintech understands its obligations, respects the customer situation, and communicates about money in a way that is both clear and responsible. Boo! No, it's not a ghost. It's the flow you hope to never have to use. The fraud and security alerts. While everything we've covered so far improves user experience, this last flow protects their money. In the world of fintech, a fraud alert sits right at the intersection of customer safety, regulatory obligation, and operational urgency. Nearly 1 in 3 customers report experiencing financial fraud each year. And whether you're under PSD2 in Europe or FFIEC rules in the US, suspicious activity has to be flagged instantly with a notice sent through secure, encrypted channels. That's why the very first message in this flow should fire the moment your risk engine detects something outside a customer's normal behavior. Here, the subject line should be crystal clear. Something along the lines of unrecognized transaction detected. The information inside the email should enable the customer to quickly recognize the event: a masked credit card number, the merchant name, the time, and the amount. In most cases, in this initial fraud alert email, you also have to ask the recipient to make a single, simple decision: confirm the transaction or report fraud. And for this, I have a tip. Over the years, I've tested a lot of ways to frame this step, and one rule always holds: keep the choices to 2. 1 button to confirm and 1 to report fraud. Anything more creates panic and an already stressful moment. Also, keep in mind to never ask for credentials, never request full account numbers, and never include links that look like login prompts. Instead, design the experience so that users can respond through a secure, pre-authenticated environment to reduce the risk of phishing confusion and to reinforce trust. If the customer reports that the transaction wasn't theirs, trigger an automated account freeze confirmation instantly. And here's where the tone shifts from alert mode to safety mode. A message like that will reassure the customer that no further transactions can go through while the issue is being investigated. In it, you can also include a reference number, a brief explanation of what will happen next, and a reminder of what documents may be needed. Once your fraud or dispute team completes its investigation, trigger a resolution notice explaining if the attempt was blocked, a refund has been issued, or further steps that are required. A smart idea is to also offer some practical advice for improving account security, like reviewing connected devices, updating passwords, and enabling additional alerts. This way, you can show that you're not just reacting to incidents, you're helping to prevent the next ones. Just remember, fraud-related communication is often reviewed long after the incident is closed by auditors, investigators, or even legal teams. So when writing and archiving these emails, make sure your team does the job in a way that proves you acted quickly and responsibly. Otherwise, congratulations, you've just earned a daily standing meeting with your favorite auditor. Yay? No. And that wraps up our rundown of the core automation flows that every fintech should have in place. Besides a better customer experience, these flows also mean cleaner audits, clearer communication, and far fewer late-night escalations from compliance. If you're looking to tighten up your email infrastructure next, jump to our SMTP compliance comparison for fintech and see which providers actually hold up. I'll see you there.